everyone. It's Mary Piasta with Sonoma Brain Trust. We're back again to give you the latest and greatest with what's happening in our world today. I'm joined with my co-host, Darren Blonsky, who's a financial advisor, and Chelsea Runnings, who's a real estate expert. And to start it off, we thought we'd go with Darren since the markets have been all doing fun things recently.
Well, I told Mary and Chelsea that the markets were doing fun things for nerds like me. I'm not sure if the rest of the world will find it that fun, but let's dive into it. Chelsea, will you give me permission to share a screen here for a second? So if you were watching the markets today, you got to experience a whipsaw of all whipsaws. Total head fake today in the markets. Let's see, it's not letting me share quite yet. Oh, there we go. All right. So the first thing we're going to look at is the the E-mini futures. So this is the futures for the S&P 500. And I'm showing you this because it's a little clearer. It trades more or less around the clock. There's people buying and betting on whether the market's going to be up or down, and gives you kind of a fuller picture. If we look at the SPY, there's a lot more gaps on it, and I'll talk about that in a minute. But the gaps make it hard to read the tea leaves, as they say. So let's take a look at the futures right now, and you can see we came into this session today, this strong green bar. And for those who joined us in the past, I explained what a bar is, and more or less it represents a period of time. Right now we're looking at the 3-hour period of time. And I'm going to move that actually to the 1 hour and give you a little more data points to see just how whipsaw it was today. And so when the market opened this morning, it was looking and trending up greatly through Asia and through London. Opened at 6:30 this morning, and wham, falling knives, moving right on down. Everyone thought this day was going to end up in the negative. We went way down, all the way down here. Let me just get fairly get rid of the volume on this so it makes a little cleaner chart for you. We went all the way down to the end of that wick there. That wick is the end, the low price of the day, and then the market reversed course and ended up finishing above the highest point it's finished since February 19th when the market started following. So positive day all around the market. There's a couple other important things that are happening in the market. There's something called a simple moving average, which represents the average close price of the market for the last 200 days, and we traded above and closed above the 200-day moving average for the first time since, I guess it's been at least 10 weeks. So back, we broke below that. Last time we closed above it was March 4th. So that can be a positive sign for the market, but we are not out of the woods yet. If you look back to 2008, the market did the same thing. One day it closed up above the 200-day moving average and successfully sold off and went on to further lows. So there's nothing to write home about quite yet, but certainly we're seeing some positive things in the market. What's positive? Well, the economy generally seems to be opening back up. Things seem to be returning to normal. Whether or not they will actually return to normal is highly debatable, and whether or not smaller companies are actually able to function as well as some of the larger ones are, we will see. You can hear in some of our other sessions, we've talked with the lawyers, we've talked with HR people. There's a lot to consideration in bringing people back to work now. A lot of headwinds for that. And that's all going to play out in the economy. That's all going to reduce gross domestic product. It's going to decrease productivity. It's going to be really difficult to return to the period of time that we saw and from a productivity standpoint prior to the COVID crisis. I'm going to show one other chart here today. We're going to what you're looking at in front of you is the money supply. This is M2. So what M2 is, it represents the velocity of money in the economy. So how much money is moving around in the economy constantly. Why is that a good thing? Well, if there's more money in our pockets, we'll spend it as consumers, right? And the more money we have in our pockets, the better the economy tends to do. So this gray bar here represents 2008, and you can see the monetary supply just barely went up in 2008, and compare that to what we're experiencing right now. It is literally a cliff up. So much that you can't even tell it's really on the chart because it's going up so straight. Well, that's going to have an impact. That's going to come out in the economy somehow, right? We don't know how. The question is, will it come down to Main Street America here in Sonoma, California, or will it just stay in the big coffers of the large corporations throughout America? That's really the debate people are having. If it comes to Main Street, then that could look really like a positive thing, and that will certainly fuel some asset bubbles. You could see those asset bubbles showing up in Chelsea's neighborhood over on real estate. You could see those asset bubbles showing up in the stock market. Most people feel that, you know, the stock market is fairly detached from the fundamentals of the underlying economy at this point. Well, you've got to remember that the stock market is a forward-looking mechanism, so it's projecting out into the future. And what you're seeing right now is an exuberance. And you're seeing excitement. We don't know if that will last. We don't know if that breaks down some more. Certainly, it would be plausible if we did see a further down. But we will see. We will keep watching it. We're not out of the woods yet. It'll look really positive if we close out this week and we're above that 200-day moving average. I'm going to start shifting my thinking from being, you know, the idea that we're in a bear market, which is a down market with a simple retracement, to the possibility that we're potentially now in the bulls have taken charge of the market, and it should be running upwards with some obvious zig and zagging.
So Darren,
that's all I got today.
Darren, a question for you. What is your advice to the folks who are looking to invest at some point in the future? Should they be, I mean, obviously reaching out to their own advisors, but should they be looking at that soon or waiting? Like, what does all this mean for them?
Yeah, I mean, it's, you know, I always say the old cliche, when's the right time to invest? Whenever you have money, right? Because here's the reality, you can't time the markets. Mm-hmm. Right now is a good buying opportunity long term, right? It's a function of, you know, when will you actually need that money? If you're, you know, 40 years old and will need it in 25, 30 years, then put it in the market and let it go and see if you can participate in the asset bubble that's likely forming. But if not, and you might need it in the next 4 to 5 years, then you got to be much more conservative about it and protect it, right? It's very possible. If you go back to 2008, and you can see this, and I'll just show this for sake of conversation and really getting to your question, Mary. If you look in 2008, we saw, and I'm just going to go back to the daily chart now for 2008, but we really saw this this rollover happen. You can see this was that first leg down in the stock market in 2008. Market goes down, retraces over 50% of what it lost, everyone thinking everything's okay, and the market just goes back down under and successively further. So that's a bear market behavior. That's how bear markets perform. You go back to 2001, same story. So why is this story different this time? Well, it could potentially be different because of, you know, the amount of money that the Fed is pumping into the system. But we're right at that point where you would expect to see a next leg down based upon history. Now, if you're young, you're 40 years old, you put it in the market, you get it working for you, and yeah, you might get a leg down, but you don't know, right? The market, all we know at this point, could just keep going up on that trend line that you see right there, that green trend line. It's been on a pretty steep ride up. It's pretty unprecedented, actually. But when the Fed's printing trillions of dollars, there's an old saying, don't step in the way of the Fed, right? Don't fight the Fed.
Thank you. So with that, Chelsea, what are you thinking about the real estate market in the last week?
Yeah, so I'm really excited right now because even though activity overall is down 15% nationally compared to last year, week after week we're seeing improvement. You guys keep hearing me say we're getting more and more people applying for mortgages, and last week we started to see pending sales increase for 2 weeks consecutively. And now we're actually starting to see showings, which means people out previewing properties to purchase. They're starting to meet pre-crisis levels. So that's exciting because people are getting back out there. They're looking at those homes. Obviously, it has a lot to do with the shelter-in-place restrictions being lifted and eased. You know, real estate wasn't essential for the first few weeks, and then we became essential, but there was so many restrictions on how we could show properties, and it had to only be virtual. And now we're allowed to go into the houses, and there's a lot more things that buyers are able to do. So we're starting to see those buyers out there They're getting into the properties. So I'm excited to see what we're going to see for the next couple weeks. I do expect that June will still be kind of challenging on a seasonal basis, just because people are still skeptical and, we're not fully out of our lockdown yet. I know we're in phase 2. I don't know what everyone else is at right now, but for phase 2 in Sonoma, people are starting to come out. We saw that over this last Memorial Day weekend with all the people out and about. So I think we might see an increase in sales in maybe like August, September, like late summer, early fall, if we don't get that second wave, which hopefully we don't get that second wave and it brings us back down. And then for Sonoma Valley, last week I told you guys we had 124 houses on the market. We are down to 119. So they're selling. And it's just, the demand is still outpacing the inventory. So that's causing prices to stay stable. We're not seeing a lot of prices going down. They're staying stable. I think a lot of sellers had anticipated that maybe the buyers would come in and want these massive discounts or reductions on pricing, but because the demand is still there, they're not seeing that. And 3 weeks ago when we started, I told you guys, pre-corona, the California Association of Realtors had released a poll that they did on home buyers and sellers on if they thought it was a good time to buy and sell. And at that time, 63%, I think it was, of home sellers thought it was a good time to sell. And 32% of buyers thought it was a good time to buy. At the end of March, home buyers still stuck around 32% thinking it was a good time to sell, and home sellers had drastically dropped down to only 30% thinking it was a good time to sell. And as of last week, home sellers have continued to go down. Only 29% think it's a good time to sell, but the home buyers are sticking where they've been at 31%, still thinking it's a good time to buy. So for everyone who thinks that it's, a crashing market, it's not. It's that lack of inventory that we're still seeing, and everyone's just pivoting a little bit, trying to figure out how to get out there and see the properties and work with the appraisers and the home inspectors and all the new restrictions. But I'm excited. I think, we're not out of the woods yet, but I am excited for what's to come in the late summer and early fall for real estate.
It's interesting because when you look at the COVID viruses, other than the fact that New York doesn't seem to be kind of imploding, certainly you look at the numbers in Brazil and they're just off the charts. But, you look at, there's certainly some reduction in cases, but it's not extreme. But I think people are just so done with staying inside. They're so done that their tolerance for risk is just going up. And people are like, I don't think I'm going to die, and I don't think it's as bad as we thought it might be. And I think that tailwind is really just coming into the markets and real estate. And that seems to be the general vibe right now, right?
Well, and we also have this kind of trend right now. Chelsea, you can talk about this. I think you have a bit, but we're here in Sonoma. We're this really neat luxury pocket of a community. And because of the stay-at-home orders, there are actually people who are relocating here and buying houses here now, right? I mean, you're seeing that, aren't you still, or has that slowed down?
We're seeing that, and they've just released another study that says later this year they expect a huge kind of a boom in inventory in the highly dense populated areas, like maybe like San Francisco or something, where everyone's going to want to move out of there, and we're going to have more of an inventory issue in places like Sonoma, where everyone's coming to purchase here because they're not having to commute for work anymore. And so that'll keep prices stable, if not increase prices, because that demand is there. But then I think on the flip side, we're going to see an increase in inventory in those places like San Francisco, San Jose, Silicon Valley, those areas where people are maybe moving out, which I think it was overwhelming, like a high 60%, close to 70% plan to relocate.
It's really exciting for our town.
I mean, like Darren said last week, hopefully it's families that can come in and bring some kids back into the schools and not just second homers anymore or vacation homes. Maybe we can get some families back here.
So I have a great photo as to why people would want to be here. I can share my screen. Okay, can everybody see that?
Yes.
Okay. So what's really exciting legally is that here in Sonoma, yesterday there was a wink when it looked like we were going into phase 3, but then it went back to phase 2. So even though we're in phase 2, we have businesses reopening. And this here is a picture of one of our treasured restaurants where they have street side dining. So there's al fresco dining here in Sonoma, like you would see in many parts of Europe. And it's great because you can see people out here having lunch, having a glass of wine, all sorts of different things. And since we are in stage 2, we're also seeing what businesses are doing as they reopen. This is all very county specific, as we heard from Mary Wright, the employment law specialist last week. But in Sonoma, what we're seeing is that for phase 2, we've got the outdoor dining that's allowed, as that photo demonstrates. We have so restaurants, wineries, breweries, and other types of those businesses are also allowed to reopen if and only if they are serving meals. And there's also the opening of more childcare options. So they're looking at summer day camp programs as well as other things. There's a movement for drive-in opportunities for people to go to, whether it's a graduation ceremony, a funeral, movies, or other things like that. And there's also the allowance of more curbside pickups. So we're seeing this roll out in our own community with curbside signs, with ads in the paper, and businesses promoting and saying, hey, we're open, come on down. And I do think that if this last weekend was any indicator, we're seeing an interest in that, not only by locals, but others as well, coming and supporting our community here. With being in phase 2, there are 2 other larger points. One is that if for businesses who are looking to reopen, it still is very important to be looking at the prior orders with respect to your specific county. Here in Sonoma, there is required language that is to be posted not only outside, but along the side and all public entrances to your facility. I'm going to screen share again to show an example of what this can look like. So right here is a basic notice. This is taken from the Sonoma County website, the emergency order. And basically you have to notify your employees and customers that they're not to enter the facility if they have symptoms. They're to maintain a certain distance of 6 feet. They're to sneeze and cough into tissues or their elbows, wear face coverings, and not shake hands or engage in unnecessary physical contact. So we're seeing businesses roll out things of this nature. One example that I saw that took kind of a funny approach to it. Can you see that? Is that working?
No.
No. Okay. I'll try it. Is it working now?
Yeah.
All right. So this is a local toy shop here in Sonoma where they're allowing basically one customer in at a time. And so they're giving a little bit of humor to it with gloves, sanitizer, and saying, if you want to touch the merchandise, you can, but please put on gloves. This is great. It helps to instill not only customer confidence, but it's a step towards helping to protect employees as well. Let's see. The last thing I'll mention is that recently the county, and this is Sonoma specific with the caveat, everybody's got to look at their own counties. The county actually is launching a COVID symptom checker app. So this is something that employees are going to have to log into to say what their health is. Now, this goes back to conversations we've had about this interplay of employee privacy and the overall need for public health and employer rights. So it's very important for businesses to massage this in a delicate way and get the expertise they need in doing this. And we have released a video with an HR specialist from Star Staffing who had some ideas on how to do that and create a warm, friendly tone about this new privacy infringement, basically on people's health rights. So the deadline for implementing this app is June 1st, and that's right around the corner. So hopefully that may be extended in light of what's going on with businesses taking steps to reopen and implement their protocols. But we will see what happens in the future. And again, this is all great news. We're seeing businesses reopen. We're seeing activity and positivity. And, you know, couldn't be more excited for our communities here as they do this in a safe manner.
I was so excited yesterday to hear that salons got the okay to open. And not in Sonoma. I was so disappointed when I woke up this morning and found out that Sonoma didn't get the okay.
So walking here, I talked to one of the salon owners who was ready to go yesterday. So there was that statement by the governor, phase 3, go on salons. And, you know, I thought about her and what she would be doing to open her salon. So she had everybody ready to go. And then this morning had to pull it all back. So it's really a roller coaster for these salons. And goodness gracious, Chelsea, we're going to have to get our appointments, huh?
I know. I'm like, please let me get away. It's been months, but I'm the only one that found it so interesting that we entered phase 2 in Memorial Weekend, which is like, it's like so many people just use Memorial Weekend as kind of like the kickoff to summer, you know, and everyone gets together and barbecues and like gets in these huge, massive groups. And this whole time they've been saying, you know, don't get in these groups, don't mingle like that. And then on the one weekend of the year where it's known that everybody gets together, they were like, okay, we're going to enter into phase 2. We can go to restaurants. We can do this. I mean, there is probably nothing behind it, but I found it so interesting that on Memorial Weekend, that's when we entered phase 2.
Hey, you know, I think there is some confusion about what that means, though, with phase 2. And I think the requirements are still encouraging people to socialize with members of their immediate household. So, I mean, I'm part of some groups that are looking at doing big group gatherings right now. And, you know, we all just need to be cautious and use our best judgment aside from the legal overlays of everything. So there's that.
I'm certainly in the group of wait and see, right? I mean, you think all the people that were partying in the Ozarks this weekend and figuratively speaking, you know, it'll be interesting to see like 14 days from now, do we have a spike in cases, right? And I don't know, but we can hope not, but I'll wait and look at the facts when the facts present themselves.
Well, and that's the great thing about our program. We're here for you people, and we will be back in 14 days to report and help you lead you through this time.
I want to put up a sign or something. You know, Cottonwood up in Shasta County, they had the rodeo on Mother's Day with like 3,000 people, and that's where my dad lives. And I had seen like they got shut down because they threw this big rodeo. And now I'm starting to see like on Facebook people holding signs that said, 14 days ago, I was at the rodeo and I'm not sick. And I saw a post today that said, we were shaking hands and we were hugging. And I saw someone passing around a bottle of whiskey and people were drinking off of it. And none of us died. Like here we are 14 days later, we're still alive. So it'll be interesting to see if Ozarks is the same way.
Right.
Good for those rodeo folk.
Yeah.
Well, I think that's all I had for today, and I'm super excited, you guys. I'm ready to get somewhat back to life, normal life, as safely as possible, but normal, and just see our economies continue shifting upwards.
Absolutely.
That's right. And the hair salon openings, bring it, please.
Jared, I know I don't think you understand the difficulties we're facing. But.
No, I understand. I managed to get my head chopped, the hair cut just recently, and up until then it was getting pretty out of control. For sure, the longest I've ever had my hair in my 39 years of existence. So.
Save a routine haircut and push it off a couple weeks again. I'll take it every time.
Yeah.
I know, absolutely. Right. Well, thank you everybody for joining us at Sonoma Brain Trust. We appreciate you.
We'll see you guys next week.
Thank you. Take care, everybody.